Welcome to the Facts versus Feelings podcast. I'm your host, Ryan Detrick, and I'm joined by my co-host, Sonu Varghese.
Cutting through the noise in 30 minutes each week with Ryan Detrick, Chief Market Strategist, and Sonu Varghese, VP Global Macro Strategist. Taking out the boring and helping investors focus on what really matters. A quick note before we start the show. Investment advisory services offered through CWM LLC, an SEC registered investment advisor. Carson Partners, a division of CWM LLC, is a nationwide partnership of advisors.
Hi, everyone. Welcome to the latest edition of Carson's Facts versus Feelings with Ryan and Sonu. Sonu, this one is episode 56. We're titling it Talking Geopolitics, Oil, and What's Next. Clearly, there is a lot of things happening in the markets and in the world right now, and we're really excited to bring in one of our partners, one of our great friends. Sonu, you want to bring him onto the podcast here?
Yeah, it's not often that we have folks from our own team, and it's really our team, right? Our team, whether it's our research team, our broader team over at Carson Group, but Carson Wealth too. I mean, we have about 350 advisors across the country. They come with varying, expertise. It's such a diverse group of folks that we have, but it's an amazing community. You've heard Ryan and me talk about that all the time, and it's so amazing to have someone like, Matt Gomoll's here, and he's, be part of special forces and all of that. Given everything that's happened around the world, we thought, wait a minute, we have somebody who we work with, week in, week out, day in, day out, who can talk to about some of this stuff, right? And so here we are with Matt on. He's a partner and wealth advisor.
Making sure you got his title right, because I was going to say Matt Gomoll, partner wealth advisor at Carson Wealth. And which part of the world? You're in the Carolinas, right, Matt? Where are you?
Yeah, I am in Raleigh, North Carolina. Glad to be on here, you guys. I've been listening since you started the pod.
That's awesome. I mean, definitely when you reached out earlier this week, I mean, believe me, what's happening is devastating, and our thoughts go out to everyone impacted by this. But, Sonu and I, we know enough to be dangerous. But then when you reached out, you are a true expert on a lot of the things we want to talk about. So we're just honored that you could spend a little time with us and the listeners of the Facts versus Feelings podcast. So let's just kind of start high level, Matt. Tell us a little bit about your background and, your experience really in the region, in the Middle East, and some of those areas. You're a wealth advisor. You know about helping people reach their investment goals, but you also have some other expertise.
Yes, yeah, absolutely. Yeah. Before I became a wealth advisor, I was an active duty officer, United States Army Special Forces. So that was where I came from before. I'm still in the reserves, Lieutenant Colonel now. I teach at Command and General Staff College now. But while I was on active duty, I did 4 deployments over to the Middle East. I've worked extensively with a lot of the actors over there, Lebanese, Israeli, Jordanians, Saudis, Egyptians, Iraqis. So I'm very familiar with that part of the world, and it is terribly complex. There is a lot of history. There's a lot of things that have happened over the years, competing interests. And so it's a very difficult neighborhood that Israel finds itself in as it's trying to respond to this attack.
And I like to think of it as you get a lot of armchair experts, right? And Matt, with everything you've been involved in, you're like an actual on the ground expert. That's the way I like to think about this.
Yeah, absolutely. We have my group was 5th Special Forces Group. We are in charge of the Middle East, and so it's our job to learn as much as we can, go over there, build relationships with people on the ground, understand where they're coming from, and try to work to advance everybody's interests.
So Matt, how many times have you been over to the Middle East? If I can jump in there.
4 times. Yeah, 4 times, total of over 2 years I spent living over there.
Wow. Okay. And you mentioned something like, that's a complex region of the world with a complex history, all of that, right? And we've had several conflicts. I mean, goodness, from 1947 onwards, ever since the creation of Israel, really, right? When they got independence from the British. And so talk to us, maybe that's a good place to start off. How different is this current situation relative to, every situation is kind of different in itself and it's complex, but how different is it this time?
Yeah, so I think it would be helpful to try to get some things that are relatable here, right? So number one, the geography over there, Israel is smack dab in the middle of previous enemies, right? So it's a state, or it's about the size of the state of New Jersey, has about 9 million people or so. So imagine over the last 70 years, if New Jersey fought three major wars with five of its neighbors, and it's still sitting there, right? It's a complex place to be. So there's a lot of things that have happened after those periods of war, the 1948 War of Independence, 6-Day War in 1967, and the Yom Kippur War. Those kind of wars ended, and Israel was really secure as a nation state, but then started to deal in the 80s, 90s, and beyond with the threat of terrorism coming from Hezbollah in southern Lebanon, coming from Hamas down in the Gaza Strip primarily. Both of those are sponsored by the state of Iran, right? Iran is exporting essentially special forces people like myself. They have their own unit called the Quds Force. They are excellent at what they do, unfortunately. And they work with and fund and have supported Hezbollah, Hamas since the 80s, really. So it's extremely complex, the situation that Israel finds itself in. Anytime they go to respond to, this is one of the asymmetric things of terrorism. Terrorists get to go on the offense, choose the time and place when they're going to attack. And the defender has to respond. We saw that ourselves in 9/11. We were attacked. We respond. We have to go overseas to do it. It got us into a 20-year cycle of the war on terror, which spread from Afghanistan, Iraq, Syria, Libya, Africa, Somalia, all over the place. Even the Philippines was part of that. So it's very hard to say where things go once you open up this conflict. So it's really hard to say. Israel is the attack on Israel was absolutely devastating. For context, they're a lot smaller. They've lost the latest death toll I saw was 1,300 people. That would be like if we lost over 40,000 people in 9/11. Just for scale of their size of population compared to ours. So the response is, it was a devastating attack, and they're going to respond appropriately. Just try to, I want us all to remember how we felt back then and what our response would have been if the death toll was a staggering amount like
that. And what we had at the time was staggering enough, right? So go ahead, Ryan.
Absolutely. I mean, it was a terrible blow to us, and we responded for a long time.
So clearly it's a very, very complex situation. That was some really interesting history. Thank you for that. And obviously it's why we have you on this week on the Facts versus Feelings podcast. But Matt, what do you think comes next? I mean, will this conflict last months, days, weeks? I mean, no one really thought Russia-Ukraine was going to last this long. I don't think they did, at least. And here we still are sitting there. How long is this going to go?
I think, the likelihood is it is measured in years. Looking at the first intifada, second intifada, those were uprisings, right? So they were a bit less than war that this is going to turn into, I think, but they still were, measured in years. This, based on the type of attack, the devastation that was brought to Israel, it's going to turn into a ground war. Right now, you see the news. We're watching it with, airstrikes. There are certainly precautions that Israel's trying to take. They don't want to take innocent civilian lives, but at the same time, Hamas is dug into northern Gaza Strip for sure. They have a tendency to place civilians near them. They have, I think it was maybe 150 hostages that they took from Israel back to the Gaza Strip with them. It's just a terribly complex problem. I believe it will probably lead to a ground invasion. After that, it gets messy. There's nothing about war that is clean. One saying that I was thinking of earlier this week is that the first casualty of war is the truth. it is going to be very, very hard to understand the ground truth of what's going on.
You mentioned that there will be an appropriate response from Israel, right? With these things, I always wondered, why don't countries, whether it's the US or Israel in this case, why not a disproportionate response, right? What precludes them from doing even more, just so that the same thing does not happen again? I realize that it's extremely hard, but I'm just wondering if you could spell that out. Why not a disproportionate response so that don't ever do this to us again?
Yeah, that's a really good question. There are the laws of armed conflict, which dictate how countries are supposed to act in war. So the idea of disproportionality, it's hard to say what that really is, right? Sure. If we go back to 9/11, we were attacked in a certain way and we responded in a certain way. That was all, certainly warranted and legal. The problem is, how do we characterize disproportionate? I think if there was ever a response that is going to be disproportionate, it will be this time, right? The Israeli government has made it clear they want to dismantle Hamas. They want to make it so they can't do this again. Mm-hmm. They've allowed Hamas to linger since the late 80s. It keeps popping its head up. It's not acting in the interest of Palestinian people. It's not making their lives better. It exists as a terrorist organization to kill Israelis. It doesn't have the ability to take over the country of Israel. So it's just there to murder and then get their own people killed. So in this case, I think we will see support for a disproportionate response where we're going to run into issues. I mean, I'm concerned about the support for this dragging on, right? This thing, as if it goes 6-12 months, the footage out of Gaza Strip will be terrible, no doubt about it. It will be a humanitarian crisis. How does the Western world stomach that? Keep supporting, this is a national security issue for Israel to make sure they can't be attacked in this way again. They have every right to do it. How does the Western world deal with that? How does it affect the Arab world, right? How does the Middle Eastern countries respond to this? As we were close to having a peace deal with Saudi Arabia and Israel, right? This was a landmark achievement that was probably months away from coming through. And what happens there?
Right. So Matt, let me jump in there. I mean, what does the conflict mean? Sorry, what does this conflict mean for the region and the world? I mean, you kind of hinted at it there, like you mentioned that peace deal between the two countries. Is that not going? I've heard that's not going to happen now. What do you think there?
Yeah, I just watched a really great interview by Senator Cory Booker last night. He was on TV talking about this problem. He was there the day of the attack. He's committed to trying to get both sides to keep moving forward, right? Towards the end of the interview, he made a statement, said, the people who benefit if this deal falls through is Iran, Hezbollah, and Hamas. That's the only people in the region who would want this deal to not happen. So, I hope the U.S. gets everybody back to the table. It's going to be a messy several months. Who knows what comes out of that, if things can spiral out. But really, I do hope that everybody stays focused on getting that peace deal in place and preventing this from escalating and spinning out into other parts of the Middle East.
Bringing Iran into the picture, and you already mentioned Iran and how they've been sponsoring, for all practical purpose, sponsoring Hamas and Hezbollah, right, over decades, really. What are the odds that Iran gets dragged into this, right? Officially, like they're unofficially, obviously involved, right? Officially, what are the odds that they get dragged into this? Because they're a large producer of oil, and ironically, as much as it's interesting that Saudi Arabia and Iran, well, one way to put it is they don't like each other, right? So, what are the odds that Iran gets dragged into it, and then what are the odds that the U.S. gets dragged into it with ground troops?
Yeah, that's absolutely. Yeah, I really don't see that happening. That is not in anybody's interest. The U.S. does not want to get back in a ground war over there. And certainly Iran has been, they've consistently provocated, but also tried to stay below a threshold of violence and activity that would generate that response. Right? They don't want to get us on their doorstep. It's not good for us. It's not good for them. Everybody knows that. I do think that Iran, their leadership knows how to play that game of, we can do this much, but we can't do that next step, right? Iran is not going to be sending direct fighters, whether it's jets, ground troops into Gaza. They're not going to do that. Now, are they going to have maybe advisors or money or weapons flowing there? Sure. They've been doing that for 30 years now. Right. So I think they will keep operating under that threshold of violence and what's acceptable. And like you said, for me, watching what they do with oil is certainly a part of this. They're a player in the oil game worldwide in the markets. So what they do to throttle up, down affects prices. Saudi Arabia certainly has the ability to do so as well. They both have a say in what happens next year.
This is a podcast for financial advisors, right? A lot of financial advisors watch this podcast and listen to it. Well, you can't really watch a podcast. Listen to this podcast. I guess watch it on YouTube. What are some things, that most financial advisors might not know, or some things financial advisors should be aware of, with all of this as it really impacts their clients?
Yeah, absolutely. That's a great question. I think oil is certainly number one. We saw, think about what was going on at the start of the Ukraine war and how markets reacted, how clients reacted to that. This is kind of like that, smaller scale, more regional for sure than the idea of Russia invading Europe. But same thing. We have multiple oil players in the region. Israel is going to go to war to defend their interests, to defend their people. How Iran and Saudi Arabia respond to that is yet to be seen. So certainly the oil markets could shift based on this. So watch that. The other area that I kind of mentioned to y'all was, this is a money thing, right? So we domestically are a little bit of a mess right now with the House and how do we can appropriate funds to support something like this. Department of Defense has money available that they can support partners and allies at any point in time, but it's Congress's job to fund, our expenses. And that is where they will eventually need to get involved. Same with Europe, right? European allies of Israel are going to be called on to do some financial support. And at the same time, we have, 18 months of Ukrainian warfare going on that we've been funding, Europe's been funding. That all takes its toll. Like Sonu and I were talking about over email, the US, Europe certainly can fund this. We can afford it. But what kind of, political wrangling does it take to get that done? Where is there popular support that wanes? I don't see this necessarily spilling over into domestic politics any more than the Ukraine war did, and support for that. There's, a little bit of momentum for, slowing down funding there that I see kind of in some political arenas. But overall, this isn't going to be where the 2024 elections fought. So overall, for markets, it's really that, is there a spillover where I think it's a very much tail risk of Iran and U.S. doing anything? Mm-hmm. It's certainly heightened more than it was 2 weeks ago. I think it's extremely low. Oil movement, the price of energy, that is probably more so. And then just two years out, if this thing's still going on, how are we funding it? What is that doing to domestic politics in Europe and the U.S.?
Yeah, just for context, the U.S. economy is $28 trillion in terms of being able to afford, even if we send Israel $14 billion, $14 billion is a lot of money, but with it as a percent of our economy, it's 0.05%. So there's no question of it, whether we can afford it. It's the politics that becomes an issue, to your point.
Yep, absolutely.
So Matt, we've only got a couple more minutes here, and we really appreciate you joining us, sharing your expertise. This was really enlightening for a very, very tragic and sad situation, but I think it's important for everyone to understand some things here. I want to shift gears for a minute, though. How long have you been a Carson partner? And tell us a little bit about, how you can leverage the Carson Group and how you leverage your investment research team, Sonu and I, for the other advisors out there listening.
Yeah, great question. So I came on board February 8th, 2020, right before COVID.
Wow.
So just 3.5 years or so. So my experience was running around, moving clients over, getting stuff signed, and then the world shut down. And it couldn't have been a better place to be during that period, right? The investment team was putting out so much content explaining the situation, holding webinars for clients, holding weekly calls for advisors, explaining what's going on, what we can expect, where we think things are going to go. So that aspect of Carson, I think, is fantastic. The way you do the research, right? Y'all are big brains, and you have a lot more big brains on the investment committee and the investment team. I love seeing what it is that you're putting out so that I can do the part of understanding my client, understanding their needs, developing a financial plan. Don't have to worry about security selection. Don't have to worry about the minutia of asset allocation when I get to bring your thoughts to the table, right? So that is the best part about it. Y'all have really stepped up what you put out. Love the house views where we get to say, here's everything we see across the world in all equity markets, all bond markets, and breaking it down and saying we're overweight, underweight, all this stuff. That's what we think the world looks like today. I get to go translate that into actual investments in a particular client account. So it's really takes a ton of weight off of me, allows me to do a better job at financial planning, understanding the client, and doing what advisors need to do.
I like that.
That was great. I mean, obviously, we're honored.
Yeah. No,
sorry,
I was just going to say.
Delay. I'm sorry, Sonu. Go ahead.
I was just going to say, I like the fact that, obviously we leverage a lot of experts, and now we've leveraged your expertise as well. So all of that goes into our research and thinking out here on the Carson Investment Research team. Sorry, Ryan, go ahead.
Mm-hmm. No, absolutely. No, I mean, I think we need to wrap things up, Matt. I mean, we're really honored that you took some time to speak with us today on the Facts versus Feelings podcast. It means a lot to us. Definitely. I guess I'll put it like this. Hopefully we don't have to bring you back on. But I know if we need some more expertise, we'll definitely reach out. So, Matt, thank you again for being a partner. Thank you for taking some time with the listeners. We're going to kind of take a break here for a second. Then Sonu and I are going to come back on and talk more about how we see the world and what's going on from a more of a standard Facts versus Feelings podcast next. But we'll be right back. Thank you. And we're back after a little break there. That was Sonu. How good was that? That was
amazing.
He's good. Yeah, he knows his stuff there, and we're really honored Matt could spend a little time with us. So, Sonu, at the kind of the halfway point, we want to point out something that's really, really cool. The middle of this November, I believe it's the 12th through the 14th, but don't quote me, but we're pretty sure it's around then. The Carson's is putting together a really, really neat conference, the Excel Represent Conference. This is a conference that is geared totally toward women, and we had it last year. It had really great reviews. If you're a financial advisor or someone in the industry looking to learn a little bit more, we'd welcome you to go to excelrepresent.com. You can sign up. Now, just note, registration does end October 24th, so you want to do this quite soon. The themes are breaking barriers, making change, and empowering each other. And by the way, last year it had some of the highest rated reviews, and they sent out the polls after you do anytime you do one of these things, and it was a widely loved conference, and so we're doing it again. And definitely check it out if you're interested. The breakout sessions will focus on growth, accelerating your business, and authentic marketing strategies. Impact. Together, we will drive our profession forward. In the future, through innovation and an agile mindset, we will reshape wealth management. Again, Excel. That's EXCELL. Represent. Registration closes the 24th. Check that out for sure. All right, Sonu, so let's kind of jump right back into things here. Building on the discussion we just had with Matt, let's talk a little bit about markets, right? The impact. I think it's somewhat surprising to a lot of people immediately after the issue started in Israel and the Middle East. Global stock markets rallied. Did that make much sense to you?
Yeah, no, we've been talking about this for a while, that, over the last 2 months, we've seen volatility, especially August and September. It's not unusual, but there's always a different reason for it. But lately it's become because yields have risen interest rates have risen really fast and quite a lot, right, over the last couple of months. And when we had the crisis in Israel over the previous week, we saw two things, right? One, oil prices went up, which is not unusual for anything that happens in that region, a geopolitical shock like this. And the other thing is people went to safe havens. And what's the safest asset in the world? It's U.S. Treasuries, right? Yields went down. And I think that's sort of like, oh, wait a minute, we can breathe a little easier because interest rates aren't that high. I think that's probably what spurred a rally in equity markets.
Agreed. I mean, we've talked a lot about the strength in the longer end of the curve, 10-year, 30-year yields, even the shorter end, it's been strong also. But the longer end has really upset the apple cart. We've seen some buying of treasuries. You could say that kind of defensive nature of buying treasuries, people wanted to own them again. At the same time, they also bought stocks initially. So here's some interesting, I think, context around things. We took a look at nearly 30 different major geopolitical events going all the way back to when Germany invaded France back in May 10th of 1940. And the truth is this: you'll have near-term volatility around these geopolitical events, absolutely. But so, 3, 6 months later to a year later, if the economy is strong, as horrible as a lot of these events are and have been, and the current one we're in right now, along with what's still going on in the Ukraine, you can have strong stock markets if the economy can shake it off. I mean, just for instance here, a year after the Cuban Missile Crisis, which was October 16th, 1962, S&P was up 28%. A year after Kennedy was assassinated back in November 22nd of 63, stock market up 23%. Matt mentioned the Six-Day War. That was June 5th, 1967. That was stock market up 13.5%. A year after that. Now, believe me, there are some times things were lower, in early 2000s, right? U.S. terrorist attacks, obviously. 9/11 is what I should have called that. Stock market didn't do well a year later. But again, the economy was weak then, right? And you had Bear Stearns going under back in March 2008, down 40% a year later. Was Bear Stearns really this major signal? No, it was a symptom, I think, of a bigger issue. And again, the other one, Middle East concerns. Iraq invaded Kuwait, August 2nd, 1990. Near term, down 13.5%. That was, give me a second here, I'll look. That was 3 months later, but a year later, actually up double digits. So again, Sonu, I think it's just interesting to put some context around this, that if the economy remains strong, like you continue to suggest, we'll talk about it here in a second, it's devastating what's happening over in other parts of the world right now. But I think from an investments point of view, just remember, a strong economy can make up for a lot of other sins, I think is how I want to summarize that. But Sonu, back to you now. Clearly, one of the big questions is oil, right? Oil spiked initially, obviously, on the concerns. Oil's been strong-ish, most of this year, honestly, even before this. But how does oil play into all of this with the U.S., and does it matter as much as it did in, say, 1990? Can we just, create our own oil, drill our own oil versus what we could before? Take it away.
We're creating our own money, and the good news is we are creating. I don't know if creating oil is the word for it, but
you know what? It's a live podcast. As I said, no one's going to create oil, but you know what? Everybody, it's been a long couple days. But, what I meant. You know what I meant.
No, but I think it's a good thing. We create money. Can we create oil? And we kind of are. We discovered a lot more oil, right? Matt just talked about, the probability that Iran gets into this conflict. It's low, but it's higher than it was 2 weeks ago, right? The odds of a wider conflict, and that would impact, Iran produces a lot of oil, and it would impact supply, right? Supply is already tight. And if Iran gets dragged into this, that's going to, I think that's what markets are thinking, oh, wait, that's why we need to, buy oil here because prices are going to go higher, right? WTI, West Texas Intermediate, basically. Prices have gone up about 3-4% since the attack, right? But the two things, right? One is the X factor, or the difference, the big difference right now versus every other geopolitical shock that's originated in the Middle East and that's affected the price of oil, including the Arab oil embargo in the 70s, right? Some of those geopolitical events that you ran through right now, markets did badly in the 70s. We had a recession, but the trigger was an energy shock, right? Now, the thing is, right now, the largest producer of oil in the world is America, right? And we've just had record oil production in July, August, and September. We're producing more oil. I guess that's the word for it, producing. I was searching for it.
There we go. We got there.
Eventually. We're producing more oil than we did back in 2019, right? 13 million barrels of crude oil, or barrels per day. That's the way we track this stuff. And overall, petroleum includes all the different products that come out of crude oil, like refined products, gasoline, things like that. That's also at a record. It's much higher than it was before the pandemic. It hit about 22 million barrels per day in August. All this to say, we are no longer importing, we're no longer a net importer of petroleum products. We are a net exporter of petroleum products. And even if you just take crude oil, right now, on a net basis, exports minus imports, we're importing about 2.5 million barrels per day. And why are we importing when you produce a lot of oil? It's complicated. The type of oil that we're importing is, that's what's needed for the refineries here. It's called heavy crude versus what we produce here is light sweet crude. So, but anyway, we're not importing as much as we did previously. And here's a big thing, Ryan. Most of what we import comes from Canada. So unless Canada chooses to go to war with us, I'd say we don't have a big problem because they're producing a lot, and our biggest source of imports of oil is Canada, right? From OPEC, which is basically Saudi Arabia, Iran, Venezuela, places like that. We're just about importing about 1 million barrels, per day, right? So which is not, that significant within the context of how much we are producing by ourselves.
So I'll just jump in here then. So you think about 73, 74, oil embargo, massively higher energy prices led to a recession. 1990, I mentioned Iraq invades Kuwait, August. There was a recession later in 1990. And if you look at your history books, maybe the economy is weakening, but I think it was the fear of that, the higher oil prices that kind of pushed us over the ledge into recession. I mean, Sonu, I've heard a lot about some similarities potentially with now and 73, 74. I think people are totally ignoring what you just said, that we are the largest, producer of oil, at least light sweet crude, in the world, right? That's what you just said. So this time, we like to say, the four most dangerous words. This time is different, said Sir John Templeton many, many years ago. This time is different because we're not as attached at the hip, if that's the right way to put it, with the Middle East as it becomes where we get our oil sources, right? We're creating it here. We're getting it from our friends up north in Canada, right?
Yeah, no, exactly. Forget the 70s, right? Even just going back 15 years to 2008, we were net importers of oil to the tune of about $400 billion a year. $400 billion, right? And that was a big part of GDP, about 4-5% of GDP at the time. Right now, we are net exporters of oil. Things have shifted. This time is different from that perspective, right? And then just getting to the households, right? At the end of the day, how does this matter for all of you listening? Ryan, yourself, and myself too, right? We all fill up car. I don't have an EV. I do fill up gas. But that the most salient way in which oil prices impact us is through gas prices. Now, here's the good news, right? Oil's gone up for about 3 months now, ever since July. Oil's gone, WTI, West Texas Intermediate, gone from about $70 a barrel to about $85. Gas prices have more or less been where they were. They've been sort of flat, right? And the good news is it's actually coming down now. Why? Because only 50% of gas prices, or what makes up gas prices, comes from oil prices. But 25% comes from what's called refining margins, right? And refining margins basically are crashing right now. They've crashed to below where they were before the pandemic. And so because of that, the American households are getting a break on gas prices. And I think a lot of places within a week, I dare say, we are going to find, you can probably fill up your car for less than $3 a gallon.
Yeah, I mean, I just got gas this morning. Dropped my daughter off at high school. She's 15. She yelled at me for the first 10 minutes of the drive about I don't even know what. Dropped her off, said I love you. She just shut the door, and that was that conversation. But nonetheless, I went and got gas after that. And It was the cheapest I filled up my car in a while. I've always been close to cracking $80. I've got a large SUV, and but I didn't crack 80, and it was actually one of the lowest numbers. So that's interesting for sure. Yeah, positive. So let's talk about that consumer for a minute here, Sonu.
Don't tell your daughter. She'll be like, okay, you need to give me those savings now.
Oh, yeah, no, I'm not going to tell her. She has Venmo DoorDash, and she's always buying stuff. Anyways, that's okay though. Nonetheless, let's talk about that consumer for a second, Sonu, because we shared this on social media. I did, and it got a kind of a fun, playful reaction. You've talked a lot about excess savings. We've heard about it. It was up around $2.3 trillion. A lot of people saying it's less than $1 trillion now. Well, a funny thing happened. They redid the math, and they found actually excess savings peaked around $2.7 trillion. But the bottom line, there's like $1 trillion more in excess savings now, up around 1.8 trillion versus where it was literally a week ago. Is the consumer all of a sudden in better shape? And how in the world can somebody miss? I mean, believe me, I've misplaced $20 here or there. Don't get me wrong. $1 trillion. How is that even possible?
I mean, I can't control this. I'm cracking up here. Yeah. I mean, I did all I worked the math behind all this stuff. But yeah, I'll put it this way. Look, the government always goes back. They revise the old data, GDP data, gross domestic income data, consumption income, and they just did some massive revisions going all the way back to 2013, right? Now, getting to excess savings is actually just a concept. Right? It was an actual, if you want to look at how much more money people have in the bank, you look at checking accounts, money markets, savings accounts, things like that. And we know there's, households have a lot more money than they did before the pandemic, right? So that proof was always there, right? But then people like to talk about excess savings because, it seems like, okay, that's where future consumption will come from, right? And right. So now, excess savings, as I mentioned, it was a concept, and it was relative to before the pandemic, people are saving about 8-9% of their incomes per month, right? If you take the difference between disposable income and consumption, they saved about 8-9%, right? And relative to that trend, initially after the pandemic, we stopped spending, we got a lot of checks from the government, savings went up, right? And so when you say excess savings, it's relative to the pre-pandemic trend. How much more did consumers save, right? Now, here's the thing. With all the revisions that the government just did, about 10 days ago, they basically said, you know what? We made a mistake. Before the pandemic, consumers weren't saving 8 to 9%. They were saving more like 6 to 7%. So the savings rate was revised down, right? So you can imagine, relative to the pre-pandemic trend, now actually we have more savings. Because why? The pre-pandemic trend went down, right? So that's how, instead of, as of a couple of months ago, with the previous calculations, previous estimates, households had about, depending on how you calculate this, somewhere between $500 to $800 billion left in quote unquote excess savings, right? But with the new estimates, which told us the consumers actually didn't save, they saved less than we originally thought before the pandemic, we now about $1.5 to $1.8 trillion. $1 trillion more in quote unquote excess savings, right? So that's how that's
I mean, it's sort of a confusing concept in a way, but nonetheless, kind of, I don't know, funny. It's a fine line between funny, hilarious, or just outright pathetic and sad that, we were that far off. And you almost wonder, believe me, I've got a lot of friends in the media. I mean, we talked on this very podcast for 6 months about one of the worries, the scary things you heard was excess savings is going away. It's going away. And I always said, what? Yeah, I said, the economy did pretty good before pre-pandemic when no one even talked about excess savings because it wasn't even really a concept. And we did okay. We did okay. And now here we are. We've got another $1 billion sitting there. So nonetheless,
trillion dollars.
Trillion. Oh, my goodness. Billion. Who's a billion? That's nothing. You're right. Trillion. My bad. So to help the economy, I mentioned this before, but we did get a new dog, Mabel. She is a Great Dane. And she was 18 pounds when we got her about 3 weeks ago, maybe 4 weeks ago. I'm not 100% sure. Either way, she's like 40 pounds now. She's growing, and we're helping the economy, Sonu, by buying a ton of stuff for this dog as she continues to grow. And she's upstairs as I record this podcast right now, and I haven't heard her yelping for a while. So thank you to Mabel, my Great Dane, for being quiet.
I have some good news for you, by the way, on that.
Good. What's that? Yeah, let's hear it.
So back in December, inflation, because just briefly, but it gets to a larger point. So pet services inflation for everything related to pet services, at the end of 2022 was running at about 10%, between. So for Q4 of last quarter, of last year, so October, November, December, inflation for pet service is running about 10%. That's come down to under 4% right now. So that's more money in your pocket, basically, Ryan.
Yeah, well, I should have bought a smaller dog and it would have saved me money, because I'll tell you this, she's on something called Bill Jack. I have no idea. Anyway, that's like the most expensive dog. I'm like, it must be made with like filet or something, because it is expensive dog food. But no, that's good. So let's finish up with that, Sonu. Inflation, right? We've had some inflation data. The headlines, PPI, CPI, what the media told us, a little hotter than expected. When you look at CPI core, the producer was PPI, but C is the CPI consumer price index. We saw that shelter, rents, things like that, they were up a lot more than anyone expected. I think I saw annualized hotels were up like 51% or 50% hotel prices. I mean, that doesn't feel like it's going to stick around, but at the same time, it is what it is. I think it surprised a lot of people, including us. We didn't expect to see shelter take a jump like that when a lot of the private data has been saying something differently. You want to talk a little bit about inflation and what we saw last week with that data?
I would say inflation is normalizing. I mean, we did see, headline inflation pick up because gas prices went up in September. But the good news is, we just spent some time talking about oil and gas prices. Gas prices are coming down. So headline inflation is going to be softer when you get the October report, right? Because gas prices have gone down. Nationwide, it averages right now about $3.60 a gallon or something like that. But then within core inflation actually came up at expectations. It's running at around 3.1% over the last 3 months, annualized pace. Now, shelter did housing inflation. Let's call housing inflation. Shelter seems like very academic or very Bureau of Labor statisticy.
That is not what we're going for on this podcast. I agree. We're not going to call it that ever again.
Let's call it housing inflation. But here's the thing. Housing inflation has nothing to do with home prices, by the way. Right. And housing inflation actually makes up about 42% of that core inflation basket. It's all rents. It's literally all rents, right? Now, you always get weird things, 1 month, maybe, something in the data. And I could get into this, but I won't, about how utility prices go into rents and things like that. But essentially, we did see a little bit of a jump, but I think that's going to come down literally because, as you mentioned, right, if you look at market data, real-time data, not the lagged official data that comes from the government, real-time data tells us that rents are falling across the country. Right. And the official data will get there at some point. I mean, we've seen this time and time again. Right. Official data follows the private data, but with a really long lag. And we've already reached that inflection point where rents are decelerating. It's just not decelerating as fast as we would like, but it is going in the right direction. Now, every month or so, you may see a blip up or down, but, these things average out. I think over the next couple of months, it will be, we're going to see housing inflation, continue to fall, right? The good news is, even though that happened, everything else started to, went the other way, right? We saw disinflation and used cars and trucks, apparel, household furnishing, pet services. I mentioned that, other recreation services, food away from home, all of that is coming down, like laundry and dry cleaning too, right? All those prices, inflation for all those services is much less than what it was, 9 months ago. That's positive.
You just reminded me, 3 days ago, I dropped off some clothes at the dry cleaner laundry. I haven't picked it up yet. I kind of forgot until you just mentioned that. So thank you, Sonu, for reminding me to go pay that. But anyways, that's what we're here for.
The podcast is useful in several different ways.
Exactly. Well, this was a little bit longer podcast than normal. Obviously, we wanted to have Matt Gomoll. So thank you again, Matt, for joining us. Definitely, everyone, if you're interested in Excel Represent, go to Excel XCE 2Ls represent.com for a really great conference. Check that out for sure. Then Sonu, I'm going to finish it with this. We're going to finish it with this one. The bull market just hit 1 year old. Let's try to wrap this up in 2 or 3 minutes. The 1 year anniversary, or the 1 year birthday. October 12th, last year, 2022, 25.5% bear market ended. Nobody knew it at the time. We were on this very podcast talking about it real time, though, that we thought we were close to a major low. Then it happened. And then in late December, we moved overweight equities, expecting a pretty good rally this year. Now, here's where it's interesting, though. 1 year off those lows, small caps haven't done much at all. Historically, small caps lead 1 year off of lows. So that hadn't happened. Also, financials are down a good amount. I don't know the exact number, but they're down a good amount. Financials usually up 1 year off the lows. Is it a new bull market, Sonu, if small caps aren't participating and financials are lagging? What's your take there?
The market's the market. I think it's a bull market. I'll just say, I mean, do we want to see small caps go up? Absolutely. But there are interest rate pressures. I mean, the fact that we have higher interest rates, that hits smaller companies more than it hits the larger companies. So right. I think, I'm not saying these things are easily explainable, but as much as it is, I think that's, I buy that explanation.
Yeah, I mean, the S&P 500 was up 22.4% 1 year off those lows. Yes, that's if you're all in small caps and all in financials, you haven't really felt it, but that's why you don't just invest in one bucket. There's different things we can invest in. Now, I'll just be honest. I looked at all the different new bull markets or bear markets that ended, maybe a better way to put it. 1 year later, up about 38% on average. So this one was, Sonu, a pretty weak first year. It was the weakest first year since the 1 year off the 87 bear market. The 87 crash, I guess we could say, ended December 4th, 1987. 1 year later, that time up 21.4%. Now, here's what people need to know. The second year of that bull market, so in the late 80s, the stock market gained 29%, the very best second year of any bull market. I guess the pessimist would say, this is not a new bull market. Small caps haven't participated. Financials have lagged. That's what the pessimist would say. The optimist, hopefully people listen to this very podcast, I think we're optimists around here, would say, a weak-ish first year maybe just means that second year is going to do better. The weakest first year ever, Sonu, was 12.8% in the first year bull market. 1 year off the 80, let's see here, 78, the year you and I were born. No, it's 78, dyslexic here. March 6th of 78, the year you and I were born, right? 78. Yeah. The second year of that one, though, gained 15%. Better than your average second year of a new bull market. What are we getting at here as we go into next year? If the economy stays strong, like we've talked about, we think if your average year gains about 9%, I don't think it's too absurd to say next year, 2024, we gain more than 9%, maybe somewhere mid, 12, 15%, maybe, I don't know, something like that. I don't think it's absurd to say. And don't forget, you have a president up for re-election. I'm not talking about red. I'm not talking about blue. I'm just talking about green, how the numbers work, okay? If you have a lame duck president, 2000, 2008, things weren't great. Now, it's not because of the president. We had a financial crisis. We had, a peak. We had a bubble, if you will, in tech stocks and bubble in the market, maybe you could say, also in 2000. But historically, stocks do a lot better when you have a president that's up for re-election than if you have a lame duck president. So that's some things to think about as we head into next year with an economy that's still being led by a pretty strong consumer with manufacturing coming back. Housing, sure, it's not perfect, but there are some real positives. So with all that, Sonu, I think it's time to wrap things up. This was episode 56. I joked Lawrence Taylor. I hear 56. I think of Lawrence Taylor. Anybody know who that is? Famous football player. Episode 56, Facts versus Feelings with Ryan and Sonu, talking geopolitics, oil, and what's next. And one final time, I want to thank Matt Gomoll, a partner from Raleigh, North Carolina, for joining us the first half of this podcast to discuss the tragic events, but really the fallout and what it all means for investors and for advisors out there and everyone, really, what it all means for everybody. So with all that, Sonu, I know the next one you and I are doing, we're doing it in California. Who are we doing the next one with? Yeah. You're going to give a little promo there.
Okay. I'm just going to say the new bond king. Right, we're talking about interest rates and everything going up. The old bond king was, Bill Gross from PIMCO, and we are going to talk to the guy who took over after he left, Dan Iverson. So I'm really excited about that.
In location, Sonu and I are going to California. Going to wear I don't know, what do you even wear in California? Maybe we'll talk off this. We'll figure.
A t-shirt?
Yeah, t-shirt, kind of maybe a funny little hat or something. Some sunglasses, maybe. Yeah, we're gonna do it live from PIMCO, so that should be a lot of fun next week. So everyone, thanks again for listening. This one was a little longer, but hopefully you got a lot out of it. Thanks, Sonu, as always. Thanks, Jessica, our producer, and thanks to Matt Gomoll for joining us. We'll see everybody next time. Take care. Thank you. Information provided on Facts versus Feelings with Sonu Varghese and Ryan Detrick are for general information only and are not intended to provide specific advice or recommendations for any individual. The statements and opinions of show guests may not be reflective of CWM, LLC, or its affiliates. Past performance is no guarantee of future results. All indices are unmanaged and may not be invested in directly. Investing involves risk, including possible loss of principal. No strategy assures success or protects against loss. To determine what may be appropriate for you, consult with your attorney, accountant, financial or tax advisor prior to investing. Guests on Facts versus Feelings are not affiliated with CWM, LLC.